Hey gang, the last few weeks, stock market's been coming down. It's been a bloodbath. There's no guess about that. There's no question about that. Now, there's a silver lining. A lot of large cap stocks are becoming cheap, which means prices are becoming attractive. I've been getting a lot of emails from you asking me if it's a good time to buy some large cap stocks. Today, I'm going to show you an analysis that tells you if a stock is pulling back or breaking down and going lower. So let's get into my lab and I'll show you how it works.
All right, we're back in the lab and I'm going to take you through a little exercise and show you how to buy stocks correctly that are pulling back. I know many of you are looking for bargains right now. And, well, it's okay to look for bargains, but there's a right time and a right place for everything. And this is not the right time to look for bargains for stocks that are really, really cheap. This is the time to look for bargains or stocks that are temporarily selling off and still remain strong, and I'll show you the difference. What we want to do is we want to go to the Stocks tab in barchart.com, and we want to go to New Highs. We'll go to 6-month highs to see all the stocks that are at or near the 6-month highs. Now we know we're dealing with stocks that are strong, inherently strong, while the market is coming down 500-600 points a day. So these are the stocks we want to look at. You can go to a 52-week high, but that may be a bit much. You can do it six-month high. That's fine. That's sufficient for what we're doing right now. That's telling us that stocks are making higher highs than the highest price in the past 6 months. Let's take a look at this stock right here, NTech. This line, what you're seeing is this is a 20-day exponential moving average. The moving average calculates the sum of all the days in the calculation and divides that number by the equal days in the average. In layman's terms, the moving average simply gives you an average, a smoothing of all the previous prices based on the time period that you enter into it. An exponential moving average puts more weight on the closer prices than the further prices, so it's a little bit more responsive for short-term market action. As you can see, the price right now on Intech Pharma is breaking out to a 6-month high, and the price is looking strong. What you want to see is strength followed by a pullback to the 20-day moving average. This is a perfect example. You see here the stock makes a 6-month high, it pulls back, it goes slightly below the 20-day exponential moving average, and you would buy right here when it crosses above. And as a filter, you can even use a 1-day test so that you want to see a full day of price action above the 20-day moving average. That's usually what I do, and then I'll buy a few ticks above the high of that day. So I would enter right here. So to summarize, we want to buy when stocks are strong and pulling back below the 20-day line and coming back above it. That's the time you want to buy. Always start with a 6-month high analysis. You can go to a 52-week high, but you can get away with a 6-month high analysis and then look for stocks pulling back to the 20-day high, just like it did right here on this stock, Intech.
Hey gang, I got a special surprise for you today. I recorded a 90-minute video class talking about pullbacks and reversals and how to spot the difference between the two. Please follow the link below this video to get started and watch this class. And again, if you have any questions, if you have some feedback, I want to hear about it. I want to know what you're thinking. Roger@wealthpress.com. Have a great weekend.